Mutisia. I'm the Chief Finance Officer for the KBA, and I'll be your moderator for today's session. Happy New Year to you. This is the first session that the KBA is hosting for this year. And the focus of today's discussion is on demystifying the newly introduced minimum tax and the digital services tax. These two taxes were introduced by the government, and they are to take effect beginning of this year. So with us, we are privileged to have the participation of Kenya Revenue Authority, and we have one of their representatives, Mr. Nixon Omondi, who is the team leader for the digital economy tax, who will take us through and basically sensitize us about these two new taxes, as well as discussing the other taxes that impact the SME sector. So we'll kick off our discussion. I'll make some few remarks just to set the stage for our speaker. And essentially is just to highlight some of the challenges that the SME sector faces in effort to comply with the tax compliance. As you may know, tax payment of tax is a statutory obligation. And to quote one of the America's founding father, Benjamin Franklin, who in 1787 quoted that in this world, nothing can be said to be certain except death and taxes. So it's upon us as citizens, we know that it's our obligation to at least comply with the statutory obligation of paying our taxes. So it's upon us basically to be prepared in terms of how we manage this risk. And as far as the businesses are concerned, and more specifically for the SME sector, it becomes a big concern in terms of the compliance cost that is involved to comply with maintaining various taxes, at the same time also having competing challenges of supporting the businesses. We've heard from different forums the challenges that SMEs face, and obviously this becomes a key risk in terms of supporting the SME sector. As always, we've always endeavored to engage with the tax authorities, and in the recent past, we have seen the Kenya Revenue Authority making effort to create awareness in terms of some of the taxes that are applicable and that impact the SMEs. So KRA has been making effort to educate the SME sector, as well as also reaching out to other taxpayers as a way of sensitizing taxpayers to enhance the compliance levels as far as tax is concerned. So obviously, the way taxes are approached by different businesses, it all depends in terms of the nature of the businesses that these organizations are undertaking. And one of the areas that we tend to encourage businesses is a question of how to maintain your record. It becomes quite critical as a business or as a taxpayer to have proper records of your business. This essentially becomes a first line defense in terms of assessing or complying with your taxes. As it is, Kenya has a self-assessment tax regime. So each taxpayer has a responsibility of ascertaining their tax liability. This obviously gives you the benefit of managing your records and of course determining the applicable taxes that the business is supposed to pay. So there are various benefits in regards to this self-assessment approach that businesses can derive from. One of those benefits is, of course, having good records in terms of managing your taxes so that you not either overpay or underpay your taxes. As you've seen in the recent past, KRA has been quite aggressive in terms of their tax enforcement and carrying out audits of various business. So it becomes critical that when your firm or your business is audited, that you have proper records that you can be able to basically support or justify the taxes that you've paid. Increasingly, being tax compliant has also brought its own advantages. We've seen the government in its own procurement processes requiring the businesses that are looking for business from government to have a proper tax compliance certificate. This gives you an aid in terms of getting business from the government sector, as well as also some private organizations are also making this a requirement before they do business with the various enterprises. So the advantage is there in terms of having a good tax compliance record. And obviously this also comes at an expense in terms of the record keeping and also paying on timely basis your respective taxes. So in summary, these are some of the key highlights that we'll be discussing in today's session. And our key speaker will really focus on the two new taxes, that is on the minimum tax, which is a new tax that has been introduced. And of course, also the other tax that relates to the digital landscape, where KRA aims to tax the digital economy as a way of broadening their tax collection. So without further ado, I would like now to introduce our speaker, Nixon Omondi, who will take us through his presentation, mainly focusing on these two new taxes. At the end of his presentation, we'll have a Q&A session where we'll give you the opportunity to ask questions relating to the presentation. As our key speaker will be making his presentation, would like to encourage you to post your question on our wall chat so that at the end of the presentation, our speaker can respond to those questions or any question relating to the activities of the KBA or the Inuka program that we are supporting for the benefit of the SME sector. At the end of the session, we'll conduct a survey to basically ascertain the quality of our webinars and areas where we can improve. So feel free to complete the survey because it helps us in terms of providing these webinars for our participants. So I'd like to now welcome Nixon to make his presentation as outlined. Thank you and welcome, Nixon.
Elaborate and well stated the introduction. The team, it's also another opportunity that we get to engage, with our dear taxpayers, and of course, I'm also a taxpayer as well. So we get to learn from one another. We get to learn the businesses that SMEs go through, the challenges that SMEs have, and you also get to learn on what is your responsibility, what is your right, what are your obligations, especially under the law, specifically with respect to tax. I want to give a lot of gratitude to KBA for having formed such a forum, a very good and enriching forum, so that we can touch base with the SMEs. Of course, I see together with the KBA, we also have the SBM Bank. Of course, we'll thank you for that, and KRA for giving me the opportunity and allowing that I'm able to connect with you, so that we understand and one another. SMEs go through a lot of challenges, both economic, financial, and social, and those others, including political challenges. But today we want to focus on tax as a main issue, because if one does not take care of their taxes properly, then you might have challenges going forward, and nobody will be wishing that KRA knocks onto your doors and ask you that 6 years prior you failed to pay a certain tax. It might be traumatizing, it might be demoralizing.
Hello, Nixon. Your mic is muted. Please unmute your mic. We can't hear you.
Hello, Nixon. You are muted. Kindly.
Yes. Are you able to hear me now? I don't know.
Yes, we are now able to hear you. You can proceed.
Hear you, sir. Proceed. Thank you.
Okay. Thank you. So I was saying that SMEs face a number of challenges, and tax is just one of them. And I always advise SMEs, talk to KRA. Whenever you have a tax issue, approach KRA, use an expert, use KBA, because I'm sure they have a number of experts, so that you're not caught on the wrong side of the law. And in the recent past, KRA is moving away from enforcement to what we refer to as trust and facilitation. In fact, this is just one of the facilitation sessions that we are having, because we want to tell our taxpayers, what do you need to do? If you're doing your business, how does it interact with the tax matters? So it is important to realize that we are transforming how we work, and we want to facilitate our taxpayers to be compliant with the laws and to pay their fair share of taxes. And of course, we are also giving SMEs a voice to be heard. From such forums, we take feedback, which we also work on to ensure that our tax laws are not just coherent enough, but they are also simple, so that our taxpayers are able to comply. So it's always important to have your voice heard. Always through KBA or through any other member organization, you are allowed to suggest how some of these tax rules can be amended, how they can be made clearer, how the tax burden can be eased, even on compliance framework. If you know people who are evading tax, you're always welcome through anonymity and anonymizing your details. Write the same to our Commissioner General, and the same will be worked on effectively. Because at the end of the day, we all of us need to pay our fair share of tax to develop our own country, Kenya. That said, I want to give a presentation, though it is dubbed digital service tax up there. I want to start with the most welcoming change that happened in 2020, known as voluntary tax disclosure program. Because that is what will be better music in our ears before we know what other taxes we are supposed to pay. So we'll start with that disclosure program, because that is an amnesty that has come under the law. And then we look at DST, then we go to minimum tax, then I might be touching in passing other taxes, so that our SMEs who are not very conversant with the tax, tax mechanisms or the different taxes that we have in the country are properly guided. That said, I want to move directly to our first presentation, which is on voluntary tax disclosure program, also dubbed VTDP. And if you have a question, please just drop it in the chat box. At the end of the presentation, our able coordinators, Ken, as well as Roslyn, will be able to read them out, and then we tackle the questions. Again, if you have a very specific question that you feel needs an elaborate answer, or needs an official, coming in a letter form, you are always welcome to write to the Commissioner Domestic Taxes, so that you are guided on how to go about your tax matters. So this law came in 2020 under the Finance Act 2020, allowing our taxpayers to disclose previous tax liabilities, and upon disclosure of that previous tax liability, you are entitled to relief, or what we call to waiver. okay, of penalties and interest. Generally, what happens is if you are supposed to pay a certain tax and you fail to pay that tax, the correct amount or within the stated duration, what happens is the moment you don't pay or you fail to pay a return, then penalties and interest are levied in addition to the tax. It becomes quite heavy. So the government saw it better that to ensure that people pay their fair share of tax, to realize much more tax in expanding the tax base, and also to relieve Kenyans of the burden of penalties and interest that have been levied on taxes that were not, paid before. So this mechanism or this program was introduced. So it is starting on 1st of January, or it started on 1st of January 2021, and it's running for 3 years. So if you have any tax that you did not pay and penalties and interest were levied, sometimes the penalty and interest goes beyond even the tax itself. So this program will allow you to pay the principal tax and get relief 100% of the penalties and interest that were levied on the same. This will really ease the tax burden that our taxpayers might be going through. So, Rosalind, into the next slide, you'll be able to see that the voluntary tax disclosure program covers taxes and penalties that were levied within a certain period up to 2019, okay, up to 2020, sorry. So any tax that you didn't pay within that period up to that date, you'll be able to apply through the system. You'll see that, and then you'll get relief for penalties and interest. Any person can apply. However, if you're already under an investigation, audit, a compliance check, or you've been served by a letter by KRA that you didn't pay a certain tax, or you want to look at your books, or the issue is already under litigation, either in the tax appeals tribunal, it is within the courts, then you will not be eligible for the voluntary tax disclosure program because your issue is already being handled on another platform. But if you've not received a letter for your business to be audited, investigated, undergoing a compliance check, or you've not received a demand and not telling you didn't pay money for 2016, taxes for 2016 with respect to this and such tax, then please, then there's an exercise that is already ongoing. You will not be eligible for the voluntary tax disclosure program. In any other case, you will be eligible, and we're asking our taxpayers, 1 month is almost gone. We want to see those applications for the voluntary tax disclosure so that you get amnesty or relief on any penalty or interest that was charged. On to the next one, Rosalind. You'll see that this voluntary tax disclosure program is almost limitless in terms of the tax heads covered. So any period between 1st July 2015, but not later than 30th June 2020, any penalty, interest that you have that has been levied, whether it is VAT, withholding tax, excise, turnover, monthly rental income, and maybe you are a proud owner of 2 or 3 units and you have failed to pay the monthly rental income, which is usually 10% of what you have received. You are being asked to pay that 10% for the period you didn't account for it, any income between 1st July 2015 to 30th June 2020, and you will get relief, total relief of the penalties and interest. This is simply an enhanced waiver program. We know that for you to get waiver of penalties and interest, there's a certain criteria and you need to apply to the commissioner. But this one now gives you a blanket waiver, provided that you have applied to the commissioner on each of these tax heads. So even income tax is also included in the tax heads. It's not just limited to VAT, withholding tax, excise, turnover, and also the monthly rental income. Yes, Roslyn, we move to the next one. Okay. Roslyn, thank you. Now, one thing that we tell our taxpayers, because this is a government initiative, that the program is fully based on trust. It is voluntary. It is you to come forward and tell us that I did not pay this much tax. I want to be relieved of penalties and interest. And after that, you proceed and execute the payment, or you are allowed to come to the commissioner and agree on a payment plan. And that is your right under the law. If you are supposed to pay some taxes and you are not able to pay the taxes, but you can pay, in installments, you're actually allowed to come, execute a payment plan with the commissioner, and you are then able to pay those taxes as agreed with the commissioner. So once you pay the principal tax, then you get relief of penalties and interest of 100% if you apply within the first year. 1 month is gone. So if you are going to come forward to do the disclosure between now and 31st December, you qualify for 100% remission of penalties and interest. If you wait until 2022, maybe you want to wait and see the next president before you do your voluntary disclosure, you will only be eligible for 50%. And then we know that Kenyans love last minute things. If you come in 2023, you'll only be eligible for 25% waiver of penalties and interest. So this is a motivation for you and me that if you have any tax arrears, this is our year. This is the year to come forward, disclose what is owing, then we get 100% waiver of penalties and interest. So the next one, Rosalind. Thank you. So how do you go about, getting your rights under the voluntary tax disclosure program? The iTax system is already enhanced. So there's a reform, a relief form under VTDP where you apply, you state how much taxes, penalties, and interest. Once you complete your application, then you'll receive an acknowledgement slip, just like when you are filing a return. And then this application must be processed within the shortest time possible, and we are giving it 30 days within KRA to look at the correctness of that application. And after 30 days, you'll get feedback that your application is accepted, and you'll get relief of 100% for 2021. So there's also a step-by-step process, a guide that is already placed in the website, KRA website, guiding you on how to go about the iTax procedure of applying for the voluntary tax disclosure. And remember, I said it is based on good faith. It is voluntary, and it is you to declare. In case we realize that you did not truthfully declare or apply to be granted the waiver, then the waiver can be withdrawn. So it is incumbent upon you and me to ensure that whatever we put up in that form for application is factual and everything is detailed therein. On to the next one, Rosalind. Yes. So that should really be a brief on the voluntary tax disclosure program. So this is your year, SMEs. If you're owing any tax, then you'll get waiver of 100% of penalties and interest levied on that tax upon payment of that tax or upon getting into a payment arrangement with the commissioner. So I hope I'll get to answer the questions at the end of the presentation. I want to move to the next one, which is digital service tax. And I'm happy that even the voluntary tax disclosure is happening through a digital means. Rosalind, to the previous slide. Yeah. So basically what we are saying is the digital economy is transforming our lives. Digitalization is transforming our lives. There's this entity that comes up with what we refer to as data never sleeps. You know, the digital economy thrives in data. So this entity is also collecting data on how you and me behave in the digital space. Even as we are speaking now, I'm sure there are people who are uploading their photos on Facebook. And this entity have realized that in 2020, every 1 minute you find 147,000 photos being uploaded onto Facebook. Every 1 minute, Amazon is shipping 6,659 packages. In the olden days, you will buy a physical product and wait, for the product to reach you. But now you don't need to go into a supermarket to shop. All you need to do is get into our website, a platform, order for your products. The products will be delivered in the shortest time possible. Look at how many users are streaming Netflix movies every 1 minute. 404,000. Okay. How many tweets are we getting every 1 minute? How many users are on WhatsApp every 1 minute? We find 41 million messages every minute being, sent across WhatsApp. And you're imagining that people spend $1 million every 1 minute on online shopping. So basically what we're saying is that the digital or digitalization of the economy is transforming our lives and how we go about our activities. On to the next one, you realize that because of digitalization, this has created a problem with the taxation regimes. In the olden days, you'll pay tax in a jurisdiction if you are physically present in that jurisdiction, what we refer to as nexus, or in some cases we refer to it as forming a permanent establishment, having a fixed place of business. But with digitalization, you don't need to have a physical place in order to do your business. So this has caused an even playing field for local digital services and also foreign digital services, because the local foreign digital providers are actually paying tax as per law, but the non-local or the foreign digital service providers are not paying any. So what does that mean? It creates unfair playing field for the two persons. And to ensure that that playing field is leveled for everyone, and again, to ensure that also the government expands the tax base, so digital service tax was introduced. Digital service tax was first introduced in the law, or taxation of the digital economy was first introduced in law in 2019, where the Section 3 was amended. Section 3 is what we call the charging section. It's what gives each of streams of income. It gives the commissioner maybe power, the government power to tax those streams of income. So income tax was revamped, yes, but specifically in 2020, digital service tax was introduced. For the ardent readers of the law, you can look at Section 12E of the Income Tax Act, upon which DST rests. So we just call it DST. Of course, the law went further to state that there needed to be regulations to ensure that there is proper implementation of digital service tax. So on the 11th of December 2020, the CS in charge of finance, treasury, gazetted the rules or regulations on how digital service tax was to be effected. And that is now what we are going to discuss. So digital service tax is coming at a time when there is also a global debate on taxation of the digital economy. It is not just Kenya that has introduced digital service tax. It is a discussion going around the globe, and a host of countries have already started either introduced or they have already introduced a digital service tax. On to the next one. Some background noise. Somebody has not muted. Okay, thank you. On to the next one. You'll see how the use of mobile phones, the use of the fiber optic, the social media has actually enhanced the issue around digitalization, and a lot of digital services are now seen within our economy. Now, specifically with the digital service tax, it is to be charged on income accrued in or derived from Kenya from the provision of a digital marketplace. And the tax is effective 1st January 2021. So we expect that if you earned income by providing services through a digital marketplace, that is between 1st and 31st January, you are supposed to pay the tax, the digital service tax, by 20th of February. But I'll highlight that again. So if you are earning income through provision of services through a digital marketplace, and a digital marketplace has been defined as a platform that connects buyers and sellers, then you are supposed to be chargeable or supposed to charge or remit the digital service tax to the commissioner. The tax is charged on the gross transaction value. What do we mean? And it is the gross transaction value of the service which you have supplied. There are people who are connecting buyers and sellers or providing what we call a digital platform. For those people, they earn the commission. And for that matter, the commission becomes the gross transaction value upon which digital service tax is supposed to be levied and remitted to the commissioner. Then there are also people who provide pure digital services. Okay, so those digital services will be charged on the gross transaction value, which is referred to as the consideration received. So what we receive for having provided the digital services is what is subject to digital service tax. This tax is not just applicable on residents. And as I explained earlier, to ensure that there's a level playing field, both residents and non-residents are supposed to take care of this tax. In layman's language, it will say local and non-local. And we are talking about a company, a partnership, an individual. They are required to account for digital service tax. For residents, it is a bit easier in that the digital service tax will apply. So you'll be required to pay the digital service tax, which is at 1.5%. But as you file your annual return, the digital service tax paid on a monthly basis is available as a credit against the annual tax payable. So for residents and those who have permanent establishments in Kenya, the digital service tax is ideally an advance tax because you claim it as you file your final return. But for non-residents, those who don't have permanent establishments here, the tax they pay as digital service tax, the 1.5%, is actually a final tax. So nothing else will be required from them unless there's any other tax that the non-residents are required to pay. Which services are liable to digital service tax? And again, allow me just to gloss over it quickly again, that digital service tax is applicable on income earned through the provision of a digital marketplace. The gross transaction value derived from the provision of such a service, such a digital service, is subject to digital service tax at 1.5% of the gross transaction value. It is effective from 1st of January 2021, and it's applicable to both residents and non-residents. For residents, it's an advance tax. Pay it on the monthly basis, but as you file your annual return, you claim what you paid in advance. But for residents, for non-residents without permanent establishments or fixed place of business in Kenya, it is ideally a final tax. It takes me to the next one. These are the list of services that are subject to digital service tax. So as SMEs, if your services fall within the scope of what I'm going to state, then you also need to ready yourself for DST. The first one is downloadable services. So we are looking at services which, okay, provide or gives the customers the authority to download and use them as downloaded materials. So we are looking at services such as apps. For you to use an app, you have to download it. And if you are going to pay for that app, then that becomes a service subject to digital service tax, which is chargeable on the provider of that service. DST is not to be accounted for by the consumers or by agents, but it is to be accounted for by the provider of the service. So if I am an app developer and I sell the app, I earn by selling that app. I'm actually providing a digital service. And whatever I receive as consideration for my app will be subject to 1.5%. So what I need to do at the end of the month, confirm how much I've received on account of providing the apps, charge 1.5%, and remit the same to the commissioner. And the downloadable digital content are various. There are also books. You pay for you to download a book. You pay to download a movie. You pay to download some music. You pay to download games. I know there are certain online games that we download for our children, and you have to pay for them. Those providers of the online games are earning through a digital platform or marketplace by providing those online games through a digital marketplace. And therefore, they are the ones who are supposed to pay 1.5% of how much they have received. Apart from downloading, there are cases where you simply stream, whether it is live streaming or it is something that was pre-recorded. So long as you are doing streaming and you are going to pay for it, the person who is earning the income by you paying is the person who will be responsible for digital service tax. And we nowadays stream videos, films, music, podcasts, webcasts, videocasts, and all those kind of over-the-top services are subject to digital service tax. Then there's also the sale of license of or any other form of monetizing data. We know that digital economy thrives on data. And whenever we go to certain sites to check out something or to purchase an item, the sites or the owners of the sites harvest our data called user activities or user data. If that data is then sold or monetized in any other way, then we say that is earning through a digital marketplace and therefore should be subject to digital service tax. We also have the issue about digital marketplace, websites, or other online programs that connect buyers and sellers. So we are looking at, platforms which connect people to buy and sell, platforms that assist you to book for an hotel, platform that is, assist you or, facilitates you to book for an excursion or even a tour. All those platforms are subject to digital service tax. And this will be accounted for by the owner or the person who is earning commission from the provision of such a platform. And then we also have services where you have to subscribe. You subscribe to watch certain news, and I'm sure we are all alive to that on our mobile phones. You might find you've gone to the wrong USSD, and you keep getting alerts, and your money is leaving you. Okay, let me put it simply like that. Then the person who is providing those news alerts is supposed to account for digital service tax. Then you can also subscribe to magazines. If you're a finance person, like I know Ken is a very serious finance person, you like to be reading a lot of finance journals, okay? Just to understand how the economy is doing in terms of finance, how banks are changing their products and, those international banks, what new products they have, so that we can also borrow the same. So if you subscribe to such magazines, then the owner of the magazine, which is now online magazine, is actually earning through the provision of a digital marketplace and therefore subject to digital service tax. Then we also have services such as electronic data management, cloud services, yes, web, storage services. Rosalind, I'm in the next slide. Web storage services and the file sharing services. If you are charged for that, the person charging you is earning through a digital marketplace and therefore subject to a digital service tax. And you also have web hosting services, or even the services of coming up with a website creators or providers. And then we have automated search engines, e-booking. I don't want to belabor on that because that is closer to the one we saw on the platforms connecting buyers and sellers. And we also have services of online distance teaching and training. Those who offer online courses, they're actually also offering digital services. And because the digital, sphere is changing every day, there's a proviso or a provision that leaves it open for any service that is provided or delivered through an online, digital, or electronic platform. So I hope that makes it a bit clear. I want to go to the next one on how do we account for it, when do we pay the tax, and is the system available? On to the next presentation, the next slide, Rosalind. Yes. KRA has availed what we call a simplified mechanism for purposes of registration, filing, and paying the tax. The iTax system is already enhanced. For residents, there is no further registration because you already have a PIN. So what has been provided is you go and just do a payment return, like the one we do for advanced vehicle for motor vehicle, advanced tax for motor vehicles, and also withholding tax, because they are not new obligations. So you won't have a new obligation. You just go to payment, file a payment return, and then you pay the taxes that are there. And the return is simple enough, not requiring a lot of details, like other returns that we know. That's why we call it a simplified registration, filing, and payment framework. The filing of returns is monthly, and you pay the tax by 20th of the month after the month in which the services were provided and you received the money. So if for the digital services that were provided, that falls within the scope of digital service tax in the month of January, we expect that the payments for that tax will be between 1st and 20th of February, as provided for in the law. And then the payment of taxes is also electronic. The good thing, our banks are on board and they can always facilitate you to pay your taxes in a very simple way, whether you want to do it through EFT, RTGS, credit note, credit, the cards, debit cards, and all that. You are able to do it. And again, because we know that one of our very, very good, vibrant payment modules, the mobile money, kind of payments, is also available under iTax. So you can still pay DST using the paybill number 572. Then you put in the PRN number, which you'll receive after coming up with the payment return. You get an e-slip number, and that is what you input. Then your taxes will be paid. Apart from this, for our non-residents, we have enabled them to register for a PIN, also using a simplified framework where they go to the iTax system, key in minimal details, of course, verifiable minimal details, which then we facilitate them to get a PIN, then they can file and pay the taxes. However, we know the law also allows non-residents to appoint a local or a resident tax representative who can also do the same things that the taxpayer can do. So for non-residents, they have options. They can do themselves registration, filing, and payment. Alternatively, they can appoint a tax representative in Kenya who will also register, file returns, and pay taxes on their behalf. Again, I'll repeat, the digital service tax is not going to be collected through agents. It is the provider of the digital service. The person who is earning by providing the digital service who will be liable to 1.5% of how much they have earned as gross transaction value. They pay it by 20th of the month, following the month in which the services were provided. On to the next one, Roslyn. Yes, yes. Now, apart from the scope which we've seen, there are also people who have been exempt or exempted from the provisions of DST. This include people who are chargeable under Section 9.2. This usually applies to non-residents. Non-resident providers of broadcasting, telecommunication, electronic, VSAT, fiber, okay, and cable, TV, they're usually covered under Section 9.2, non-residents. These are non-local business people. So if the income is already chargeable under Section 9.2, DST will also not apply. And again, if your income is covered under Section 35, Section 35 in law is the withholding income tax provision. So if you supply a service and it's a digital service and it falls within withholding tax provisions, and whoever you've supplied, as they pay you, they withhold at a certain rate, maybe 5% or 20%, depending on your residency and the nature of the service. You'll, as the provider of that service, you'll not be expected again to account for DST, just to ensure that there's no double jeopardy. You are not taxed twice. And then there are also online services provided by government institutions. These ones are also exempt. And the last one is on income exempt under the first schedule of the Income Tax Act. So if you provide certain services which are already exempt under the law and you have an exemption certificate to that effect, even if you provide a digital service, you will not be expected to do digital service tax. Then the last one, sorry, is on online services which facilitate payments, lending, trading, commodities, forex, and all that. If the provider of those online services is listed in the fourth schedule. The fourth schedule lists a number of institutions, including banks, which are regulated by CBK. We have microfinance institutions, we have SACCOs therein, we also have building societies and such like organizations. So if you are an SME, please confirm that you are within fourth schedule. And if you are within the fourth schedule and you provide online services facilitating those kind of activities listed there, then you will not be paying DST. And then you also have people who provide financial services and they are licensed or approved by CBK. We also don't expect them to pay digital service tax, even if they are earning money by providing online services. That said, I think that should take us to the end of the digital service tax. Of course, a bit brief. I will share the presentation. I've already seen the question. We'll share the presentation with you. But the last one there is on a quick highlight of what I've talked about. You provide a digital service. Yes. You are the one who is charging, correct? Do 1.5% of the gross amount you've paid. Make sure by 1st of January you're on board, so that by 20th of January, you are able to pay the taxes, be it a resident or a non-resident. So that is just a highlight of the digital service tax. I want to move to the next presentation, which is on minimum tax, of course, again, very quickly. Then I will have just a highlight on the other tax heads for purposes of our SMEs. That it was realized that there are companies in Kenya that operate and they are perpetually in losses. And to ensure that everybody contribute their fair share of taxes as per the Constitution, I think that should be Article 209, thereabout, minimum tax was introduced in Finance Act 2020. This is to ensure that everybody is contributing their fair share of taxes, and more specifically for those who are perpetually reporting losses. Minimum tax is at the rate of 1% of the gross turnover, effective 1st January 2021. And the minimum tax is supposed to operate alongside the installment taxes. And I'm sure most of us understand the installment taxes. Installment taxes operates in a quarterly basis. All businesses, if you expect your income to be more than 40, your taxes to be more than 40,000 and above in any given year, you need to operate an installment kind of payment for the taxes. What it means is that you pay the tax in advance, which is good maybe because it assists you to pay the taxes when you have the ability, and you also have over 12 months in which you are going to pay those taxes. So at each installment date, you also calculate 1% of turnover. You compare the two, and the higher one is what you pay as tax for that kind of installment on that date. But where the installment is higher, you pay the installment tax, and vice versa. So what we're saying is, if your accounting year end is 31st December, your first installment is by 20th of April. Okay? So on that date, you calculate how much is the installment tax. Alongside that calculation, you also do 1% of the gross turnover for that period. You compare the two. The higher one is what you pay. If the minimum tax, which has been set as 1% of the gross turnover, is higher, you pay the minimum tax. And you repeat that, you do the same, kind of calculation for all the 4 quarters. And then at the end of the year, you are now able to determine how much profit, what is your actual turnover. You do a comparison of the same, and then you, of course, pick credit for the installment taxes. And if there's any tax to pay, you pay it. And next, Roslyn. Yes. So the 1% is taxed on gross turnover. So what is gross turnover? So gross turnover means receipts, earnings, revenue, takings, yield, proceeds, sales, or other income chargeable to tax under Section 3.2. So what we are saying is that any kind of income which is already defined in the law as subject to tax should be part of the gross turnover. Okay? But there are certain incomes that should not be part of your gross turnover. For example, if I'm doing business and I'm also employed, then Section 5, which is on employment income, the gross income that the employer pays me will not form part of the gross turnover. And then those who are in residential income tax, that is under Section 6A. 12C is turnover tax, and the 8th schedule is capital gains tax, or the ones who 9th schedule, which is income from the extractive industry, and any other income that is exempt under the law. And I don't want to belabor with installment tax. What we need to take home is minimum tax operates alongside installment tax. And whatever is higher is what you pay. It is to ensure that everybody contributes their fair share of tax, specifically for those who are in perpetual losses. Next slide, Rose. Yes. These are the people who are not subject to minimum tax. The first person is, if your income is already exempt under the Income Tax Act, usually you talk of Section 13, 14, and the first schedule, then you will not be subject to minimum tax. Employment income, I've already mentioned. Residential rental income, I've mentioned that. Turnover tax. Remember, turnover tax currently is set at 1% of turnover. Minimum tax is also 1%, so there's harmony in that. So if you're within the turnover tax regime, then already it's like you're under the minimum tax regime, so you don't need to operate the minimum tax. And then income tax under capital gains tax, which is 5% of the gain or the net gain, it will not be subjected to minimum tax again. And then there was an amendment that introduced persons whose business or retail price is controlled by the government. An example will be the petroleum companies. For purposes of diesel and and kerosene and all that, that the price is already controlled, they'll also not be subjected to minimum tax. And then we also have people who are doing those who are engaged in insurance business are also not subject to minimum tax. I think I see questions around that. We'll just handle the question in a short while. Next one. Yes. And remember, the minimum tax start operating on the 1st of January 2021. And as SMEs, even as we have talked about those two taxes, that is DST and minimum tax, you are still required to abide by the provisions of the VAT law, which requires that if you're doing a vatable service or a vatable good and your turnover gets to 5 million and above, you need to register and account for VAT. And then for SMEs who are employing people, or even the director, any employee within your business, you need to deduct pay as you earn at the correct rate and remit the same to the commissioner. I've already talked about the turnover tax, which is a tax on turnover for small businesses. Any business whose turnover is less than 10 million, as opposed to 50 million, sorry, as opposed to be under turnover tax. However, if you do a professional business or a professional activity, you are not allowed to be there, to be under the turnover tax. So it's a tax that is applying for the small-time buyers and sellers up to 50 million. They do 1% of turnover, and that becomes a final tax. No other tax will be required of you. And then there's also excise, because we know that the digital economy has enhanced a lot of manufacturing happening outside the big factories that we used to know. I see a number of people are now doing cosmetics. They're doing, some alcohol products. They're able to do them at home. Make sure that whatever activity you're doing as an SME is licensed by the commissioner, because you don't want to rub shoulders with, the enforcement teams, because you did not abide by the rules for you to produce and sell excisable products. And there's also excise duty levied on those products, products such as water, alcoholic beverages. There's also soft drinks. There are financial transactions. All these are liable to excise duty. So you should always remember, as SMEs, when you're getting into a business, check out which taxes are applicable to me. In fact, you're allowed to write to the commissioner and highlight your business, how you want to conduct your business, and be guided on which taxes are applicable and how to go about those taxes without being non-compliant. And of course, we have the mother of taxes, income tax, which applies to any income. In fact, pay as you earn, turnover tax, digital service tax, minimum tax, all those are actually subsets of the income tax, which is a tax based on either profits or earnings, depending on the nature of the income. Yes, Ken, with that, can I say I've come to a close of the presentation? Then we can pick questions that will help to highlight more of whatever I have presented. And as you get the presentation, you'll be able to see our contacts, so that in case of queries, in case of clarifications, you can always write to us. Our doors are always open, and we'll give you specific answers to your queries. Whenever it is delayed, please, you'll forgive us, but we will definitely answer you and guide you properly, so that all of us, we develop our country, Kenya. Thank you.
Yeah, thank you, Nixon, for that informative presentation. We really thank you for that. Yeah, now there are many questions that have been posted on the chat, largely touching on the minimum tax. So before we look at those questions, mine is just to ask you whether KRA has made any arrangements to educate taxpayers on these two new taxes. I think tax education is important in terms of assisting taxpayers to understand and comply with these taxes. I don't know what arrangements are in place. Perhaps you can just explain to us so that the participants are aware.
Thank you. There has been a lot of taxpayer education, just to ensure that our taxpayers understand the obligations with respect to minimum tax, DST as well, and of course this is such kind of a forum, and we do it on print media, we do it on audio visual, on TV stations, on radio stations, just to ensure that our members are updated on some of these new taxes that are coming in. In addition to that, we also have a guideline posted on our website on the minimum tax that guide our taxpayers on what is it, how do you go about it. But again, as I said, every business is unique. If you have a specific question that is not covered in the general guideline, our doors are always open. You can write to us, and then we'll be able to give you a specific answer. But the education is continuing. It is not a one-off event. This is just one of them, but we still have a lot of sessions taking our taxpayers through the same. In fact, today, I don't know, there was to be a session at 10 on just taking all our taxpayers about the VDP, the voluntary tax disclosure, the minimum tax, turnover tax, and such like. But it's something that has been done and it is ongoing, Ken.
Okay, so thank you, Nixon, for that information. Because of limitation in time, we'll not accord the opportunity to participants to ask questions, but we can quickly go through the questions that have been posted on the chat. And I would like to start with the DST questions. One of the questions that has been raised is about the online trading platform. These are the providers who are dealing in Forex or online trading platform. Are they expected to account for DST, considering that these are businesses that have been licensed by the Capital Market Authority? That's one of the questions relating to DST that has been raised. I don't know whether you'd like to take that, Nixon.
Yes, I wanted to comment on that. You know, the law is very clear that you are only exempt if your income is, if you as the provider of the service is licensed, approved, registered by CBK, or you are in the fourth schedule. And I think if you look at the fourth schedule, I don't see Capital Markets Authority appearing there. I think it's a discussion that we can pick up further to that, because CMA is a regulatory authority and has an arm of Treasury, just like Kenya Revenue Authority. That can be looked at. But because the law has already clarified who is exempt and who is not exempt. So if you provide a platform where people trade Forex, remember DST is not on the Forex, because Forex is, it's not digital money. Cryptos, yes, that would be digital. We will charge cryptos. But for the Forex, we are looking at the platform where people are transacting. And if you are the provider of the platform and you earn money by providing that platform, whether you are a resident person, that's let's say a local person, or you are a foreign person, we will expect you to account for 1.5% of how much you derive by providing that platform. However, as I've said, the issue about those who are licensed under CMA can be discussed further, and then further guidance given on the same. Thank you, Ken. I hope I've done it justice.
Yeah, I think you've adequately responded to that question. I think most of the questions that have been posted relate to the minimum tax. So I'll pick a few that I'll ask you to respond to. One of the questions that has been posted is from Danny, and this question is in regard to businesses that have been operational over 5 years, but have not been filing VAT returns and annual corporate tax. So the question, I think, is in regards to whether these businesses are subject to file the minimum tax. Essentially, these are dormant businesses. I don't know whether the minimum tax applies to those kind of businesses. So let me just read a couple so that you can take them together. Then there was also a question asking about the distinction between advance tax and the final tax. I think that should be straightforward. Yeah, let me scroll down. I look for more questions. Okay. Okay. Yeah. Okay, the other question is in regards to commission-based businesses. And the question is whether the gross turnover on these commissions apply or it's the total value of the transaction. So the question is basically seeking clarification on the commission-based businesses. And the question is whether gross turnover tax is on the commission or on the total value of the transaction. So perhaps, Nixon, you can take those three questions.
Okay, thank you. I think they are very good and valid questions. The issue of non-filing. In fact, I see two issues in this scenario. If you have not filed and paid VAT and income tax for 5 years, one, minimum tax will not apply because this is income that was earned before 1st of January 2021. Minimum tax applies to income earned from the financial year 1st of January 2021 going forward. So there's nothing about minimum tax in that. However, these are the people who are contemplated under the voluntary tax disclosure mechanism under Section 37 of the Tax Procedure Act. So what happens is, if the commission has not given you a letter coming to investigate, audit, or check why you have not filed a return and paid the money, or you don't have a letter, then you come forward, disclose the same to the commissioner. Tell the commissioner through iTax that I didn't pay taxes for 5 years since 2016. Okay, VAT is this much, income is this much, and the penalties arising from non-compliance. You know, VAT is every month you fail to pay, you find the 10,000 per month penalties. So you shall have accrued 10,000 times 5 years. That's almost 600,000. Those are the kind of amounts that the commissioner will waive 100% if you apply within 2021. And then the second question on advance tax versus final. Advance tax basically means the government gets the taxes in advance. And advance taxes are usually available as credit against the final tax. So what we mean is, at the end of the year, let me use a simpler scenario. For employees, pay is usually deducted. But at the end of the year, you need to aggregate all incomes that you have earned, whether from business, employment, and other sources, and then levy tax on it. Once you levy tax, you claim credit for the taxes that you paid in advance. So pay becomes like an advance tax. There is also the advance tax on motor vehicle that you do by 20th of January every year, or 20th of the month after end of accounting period, or when you go for inspection, when you acquire a new vehicle. Okay, that is an advance tax because it's available as credit against the final income tax that is payable. Withholding tax is also a kind of advance tax in some cases. In some cases, it's a final tax because the moment you pay it, no other thing is required of you. But in a number of cases, it's an advance tax because what you paid is available as credit as you file your final return. And then the last one is commission-based business. If your business is actually an agency kind of business, commission-based business, then the gross transaction value or the gross turnover can only be the commission received for both minimum tax and also even for digital service tax. But again, we'll be very careful to ensure that people don't hide behind commissions in order to dodge the digital service tax or the minimum tax, which is based on the gross transaction value. Thank you, Ken.
Yeah, thank you, Nixon, for responding to those three questions. I have seen two of our participants have raised their hands, and I think it would be unfair to close the meeting without according the participants to ask their question. So I'll ask the first participant, that is Henry Sang, to unmute his mic and ask his question. Please, Henry, keep your question simple straight so that Nixon can be able to respond. So over to you, Henry.
Yes, thank you. You can hear me?
Yes, we can hear you.
Yes, very clear,
proceed,
very
please.
clear.
Yes, my question to Nixon, thank you for the good presentation. This is on the due dates of the minimum tax, which is on the 20th of the 4th, 6th, 9th, and the 12 months. Computing it, that we know how to compute it. Now, on the 20th of April, we'll pay either the minimum tax or the installment tax. So computing the installment tax, we already know what figure to base the computation of the installment tax, which you compare prior year and current year, whichever is lower. So that one is easy to compute and we know how to compute it. For minimum tax, the first quarter is January, February, and March. So I believe you add up all the turnovers for the 3 months, compute 1%, and then pay that 1% on the 20th of April. So that is straightforward, it's clear. Come the second quarter, so that minimum tax is due on the 20th of June. So you have turnover for April, May, but June, you have only 20 days because you pay on the 20th. So that means there is 10 days left for June from 21st to 30th because this tax is due on the 20th. You see where the problem is?
I see.
Yes. So for the second quarter and even the third and the fourth, because it's due on the 20th. Yes. And you see, if I'm paying my if I'm paying my tax on the 20th of June, do I also take the 20 days of June? I think that you really need to clarify to taxpayers because there's a problem there.
Thank you for the very good question. Yes. What happened? We have also noted the technicality in that issue because there's been debate on whether minimum tax is on actual or even estimates, like installments. And I think our office is working on that. I think before the 5th or before the end of February, taxpayers will be guided on how to calculate the minimum tax. So in this forum, sorry, I might not give you the straight answer because it's still a matter under discussion, but you will be guided. In fact, we'll be updating the guidelines that we gave on minimum tax to ensure that our taxpayers are properly guided on how to calculate the minimum tax alongside the installment tax. But thanks a lot, Joseph, for that. But the issue is actually being addressed.
Oh, thank you very much.
That's okay.
Thank you, Nixon. So the next the question, I'll give it to Nuru Mugambi. She's my colleague at the KBA, and she's the Director for Communication and Public Relation. And she's the one also who is spearheading this Inuka program. So over to you, Nuru.
I'm not sure if you can hear me.
Yes, we can hear you, Nuru.
Very clear.
I get it's such a wonderful presentation, Mr. Omondi. Thank you so much. And really, we also want to welcome everyone who is on the line. Mr. Omondi, I just have a general comment. And the fact is, through this Inuka program, we have seen how Kenyans want to contribute to this country. And Kenyans are also very enterprising. So through the Inuka program, we're trying to see how do we support these businesses to formalize and make it easy for them to transition into the formal economy, including through tax compliance. So my question to you is, how can we support our Inuka participants to really understand how to navigate? Because just looking at the chat and listening to the questions, we see that they're very individual type questions, right? But people might be worried or scared to raise these questions directly with KRA for fear that you guys will turn around and slap a huge tax assessment. So I'm wondering, and therefore, you know, it just becomes this chicken and egg situation. So I'm wondering, how can we partner with you as KBA and your office to create some kind of a tax consulting support center where people can come without prejudice to ask their individual questions and not fear that come Monday, KRA is knocking on their door and closing their business. we have actually had to see the closure of 2 small businesses that work with KRA because the tax assessment that was made was quite irregular in terms of how much they were able to cover. So we do not want to see any more businesses closing, especially businesses who want to pay their taxes, but they feel that KRA is not willing to engage on a proper payment plan. So my question is, how can we partner? And then also leveraging on technology, you can use chatbots, for example, where people can consult on the general issues, but those individual consulting issues about how do I ensure I'm tax compliant and what taxes am I supposed to pay when, how can we collaborate on that? Thank you.
Thank you so much, Noor, for that. One thing is, most of us, I think we have the same problem. I'm not saying SMEs have the problem. We go to the hospital when we really feel sick, not when we start feeling a bit of the symptoms. And that is a similar scenario to what we see in tax. One, I want to urge SMEs, when you are getting into a business venture, seek an expert opinion. What taxes apply to me? And you can always come to KRA and ask for similar kind of engagement. You can always call me. I'm always open. I can always advise. I will not charge even a cent because that is my duty as a public servant. Number two, this issue of partnering, I think, is the way to go. I will suggest one is, of course, now we have the issues about COVID. If it was not there, we would have a clinic, kind of. We would do a tax clinic where KRA can actually send, through our marketing office, send a number of officers with their systems, so that if there's need to be demonstration on how to go about a certain tax issue, each taxpayer can then be taken through. Or your business is this way, so I expect you to account for this tax, file on this date, file this way, and I can even look at your ledger and tell you, already see a problem. Are you able to go and address this problem before enforcement procedures start? And actually, I know currently we are reducing on enforcement procedures. Why? Because we are giving taxpayers an opportunity to apply for the voluntary tax disclosure, open and voluntary disclosure program. But I think the way to go is to partner, hold these meetings regularly, and I'm thinking we can have more narrow topics so that we don't wander around everything, and then at the end of the day we don't get things proper. We can have more regular meetings, very topical meetings. We can have demonstrations. Like if I was talking about DST, if you had time, we'll even look at a demonstration. How do you file a DST return? For non-residents, how do they apply for a PIN? And the taxpayers really feel guided when you take them on a step-by-step approach. So I think we can leverage on that, Nuru, in our subsequent meetings. And we never get tired of training our taxpayers, because in KRA we believe that an informed taxpayer is generally a very compliant taxpayer. So I think we need to do that, and we do more of a clinic. Hopefully, maybe the pandemic will go away. And again, we can also leverage on technology and see if we can combine forces and create animations, create guidelines, very simple one, which you can then share with your members on each of the tax issues. How do I go about this? They're able to watch either video, or they are able to go through a process to ensure that they understand that. But I still advise, always seek the opinion of also experts, and where they are not available or where they are too expensive, our doors are always open. Nuru, I hope I've tried.
Yes, Asante.
Yeah, thank you, Nixon, for agreeing to partner with us to support the SME sector.
Sure.
We've actually overrun the time we had allocated for this session, but I'll only allow one more question from Mr. Evans Njiru. This should be the last question before we wrap up. In the meantime, I would like to ask the participants to at least complete the survey to basically rate how we've handled this session. Please just spend some few minutes to complete the survey. So Evans, you can ask your question, and keep it simple.
Thank you very much. My name is actually Susan Jeru, and I work with Nixon. I work in the Taxpayer Services division. And thank you, Nixon, for the presentation. I just wanted to pick up on the request to partner with KRA. That is actually the work that we do. And I would request maybe you can channel the request through Roslyn if you have a particular schedule that you have regarding training of your MSMEs that you would like KRA to come in at some point, that I would encourage you to do that. You can also get in touch with us through KRA seminar. I think we will give that information to Roslyn, KRA seminar at kra.go.ke. We have daily trainings, webinars for newly registered taxpayers, depending on the tax head that you register for. We also have specific trainings that are driven by different sector managers in different TSOs, tax service offices. And so the options are there, they exist. Perhaps what is not there is the wide knowledge on when the dates when these trainings will come. And so I will work with Roslyn, and maybe Roslyn can also let us know of schedules, the schedule that you have, and we will be willing to plug into whatever existing schedule there is. So thank you very much for giving us this opportunity, and thank you, Nixon.
Yeah, thank you, Susan, for sharing the details. So before we wrap up, I'll invite Margaret Kimani from SBM Bank. They were also a partner in hosting this session. So Margaret, over to you, please. Margaret, you can unmute your mic. It appears like Margaret is having a problem. So I think I would like now to quickly close this session. Mine is to thank all the participants who spared time to join us and to ask questions. Oh, I can see Margaret now. She's available. So Margaret, over to you.
Apologies. My sincere apologies. Good morning, everyone. You can hear me?
Yes, Margaret, we can hear you.
Yes,
you
Margaret,
can proceed, please.
Yeah, thank you. So I'm Margaret. I'm from SBM Bank, and I want to thank KRA, KBA for collaborating with us. So I think Nuru has asked the question I wanted to kindly ask. So we have 52 branches, State Bank of Mauritius. So we have 52 branches in Kenya. And our focus is obviously to make sure that our customers are compliant. So I was humbly requesting, because we have SME hubs and we see that the economy is opening up. We have 5 SME hubs in the country. So I think there's room to collaborate, perhaps even bring some of the customers with social distancing and MOH protocols. Bring some of the customers to our SME hubs with you guys, so that some of them need physical help in a way, like slowly guiding them how to do this one. So my call to action is we really are here to work with you guys. It is our honor and pleasure to serve our customers and make sure that they are compliant so that they don't shut their businesses. So yes, you have our support, and yeah, let's work together. And I want to thank Nuru's team, KBS team, for really reaching out and making this happen. And thank you.
Yeah, thank you, Margaret, for those comments. We'll definitely continue working together to support the SME sector, which has been identified as the engine of growing our economy. So on behalf of KBA, particularly the communication and public relation team, my gratitude is to Nuru and also Roslyn for setting up this session, and also to thank the KRA team, more particularly to Nixon for the great presentation, and also Susan for agreeing to partner with us and making this session a reality. Of course, our gratitude also is extended to the SPM team, who continue to be our partner in the Inuka program. So mine is to thank all the participants for your question. I know we didn't get the opportunity to respond to the chat, but we'll forward these questions to the KRA team so that they can respond to them. At the same time, we'll also share the slides that were projected so that you can get more details in terms of the presentation that we got from Nixon. So mine is to thank you and to wish you a good day ahead. Thank you until the next time we host another session. Thank you very much and have a good day. Thank you.
Thank you, Ken. Good day to you too. Thanks the participants as well.
Thank you. Bye-bye.